Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock with news. We have a big sell-off underway, induced by markets fearful of a united central bank resolve, who all remain focused on tackling inflation, and a growing understanding that this may require an economic recession to achieve that outcome. The trigger from both the US and EU is that policymakers have indicated interest rates may have to go much higher before the inflation battle is won. In the US, their data releases today aren't helping the investor mood either. And despite all this growing negativity, the American labour market rolls on in a positive vein. There are 249,000 new jobless claims last week, a decrease from the prior week, taking the total number of people on these benefits at just 1.5 million. Also a fall, and more than 230,000 less than year-ago levels. Their insured unemployment rate has stayed very low at just 1%. And there was a set of official data released in China yesterday, much of it also very weak. Retail sales fell by more than expected, and to be a massive 5.9% below year-ago levels in October. Given the pervasive lockdowns, analysts had thought this would fall by 3.7%. In fact, it was almost twice that. And we should note that the official Chinese unemployment rate rose to 5.7% in November from 5.5% in October, which for a labour market of 792 million, that is a huge extra number of jobless, 1.14 million. Given most Western countries have jobless rates in the 3 to 4% range, Europe accepted, China's labour market is an outlier. Meanwhile, China's COVID response is careening off the rails. In Taiwan, their central bank raised its policy rate by a small 12 basis points to 1.75%. Hong Kong mirrored the US Fed, as they always do, with a 50 basis point rise to 4.75%. In Europe, there are a string of central bank rate rises there too. The ECB raised their policy rate by 50 basis points to 2.5%. Norway raised theirs to 2.75% with a 25 basis points change as expected. England also raised theirs by 50 basis points to 3.5%, also as expected, and mirroring both the US Fed and the ECB. And Switzerland made the same 50 basis points change, taking theirs to 1%. All suggested more rate hikes were on their way in 2023. The US Treasury 10-year yield started today at 3.43% and down 7 basis points from this time yesterday, and building on the recent big drop. And as we noted earlier, Wall Street's Thursday session is very negative, with the S&P 500 down 2.9%. And the price of gold will open today at $1,778 an ounce. That's down $33 from this time yesterday. And oil prices start today down $1 at just on $76 a barrel in the US, while the international Brent price is now just on $81 a barrel. And the Kiwi dollar will open today at 63.5 US cents and down more than 1 cent overnight. Against the Australian dollars, we're up more than half a cent to 94.6 Australian cents. Commodity currencies are not in favour today. Against the euro, we're down at 59.7 euro cents, and that's also down almost a cent. That means our trade-weighted index starts today at 72.2 and down 20 basis points. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.